Right.
Hello.
Hey, okay, you're on there. I have everybody muted as they enter the room. So we don't have all the background noise. Todd, I think you're still muted if you want to try to unmute. Let's see, let me ask him, ask to unmute. There we go. There he goes. Hey.
Hi, how are you?
Yep. All right.
Ralph, how you feeling? Have you recovered?
Yeah, for the most part, yeah.
What was the length of your flight back?
12 hours.
Yeah,
Oh.
yeah, I did. Mine was 13.
Yeah.
I remember
Yeah.
that.
Then we got stuck in Chicago for a couple of hours.
Always Chicago.
Yeah,
I've got stuck in O'Hare every time I've gone that way.
Yeah.
yeah.
Justin got his flight canceled. He had to spend the night in New York.
Oh man.
Oh, gross.
Yeah, so he didn't get back till Monday afternoon.
Did he find a place out by the airport or?
Oh, well, Catherine was going back to New York to stay with her brother, so she
Ah,
just
okay.
rode into town with him and then
Yeah,
came back out Monday morning.
gotcha. All right. Well, that's good. Because that, if you really got stuck in like in the city, that could cost a fortune for one night, you know?
Yeah.
Yeah, I forgot Catherine's brother was from New York, yeah.
Should I let David in? Do you want to let David in early, Ralph? He's in the waiting room with a few other, Harry
Okay.
Mara, Nick Sadoti. You want David in here now?
You can. That's fine.
Okay.
Chris, you have full control, right? I don't
Oh,
have to.
Yeah, I think. Let me see, Ralph.
Did you send it to me? Did you send me the PowerPoint?
Yeah, it's the one that you looked at, that you said it looked
Okay.
good.
Yeah, hold
Let me
on.
see.
Let me pull it
Okay.
up. And let me close out a bunch of other stuff that I might have open.
I know, it's always, yeah, when the share screen shows up and you can just see
Yeah.
everyone's Google and LinkedIn and Facebook and whatever else. It's taking a while for people to connect, like David's right now, but it's doing, Ralph, yours did that for a while too. I don't know why, but
Do you have something, Christy, that shows you like to allow people in at this point or not?
yeah. So right now there's just two people in the waiting room, Harry
Okay.
Mara and Nick
Nick Sadati, yeah.
Sadoti. Yeah. So
Sadoti.
and I can do them one by one or
Yeah.
admit all. So just
Okay.
now, like for y'all, I was just doing it, as we went, but once they all get in here, we still have 8 minutes,
Yeah.
which is actually a really long 8 minutes when you're waiting.
Oh, it says you've disabled screen sharing.
Oh.
So I was gonna go ahead and pull it up and have it sit.
Yeah,
Ralph, do you want to just get started or do you want an introduction, whatever you prefer?
Yeah, go ahead and introduce me.
Okay,
All right, try that, Ralph, now.
Give me some credence.
I will. I will.
Let's see.
David, can you hear?
I can,
Yay. Thanks for doing those Grubhub things.
certainly. You did
Nothing,
the
no,
hard
no
work.
weird feedback yet. We're good.
No, I just got one advisor said, thank you. Tom Marsh.
Oh, he is so polite. and He's on like every one of our things.
Yeah, he's a nice guy.
Yeah,
And you did all the hard work on it, so thank you.
I wouldn't say that, but you're welcome.
All right, you see the, is it up there now?
Yeah.
Yeah, look,
Yep.
Good.
Christie, I really like that.
yeah, it looks, you'll see as we go through it. It's clean, it's nice, and Ralph made some nice charts that are really do a good job of kind of simplifying this, and it's you'll see, I think this is gonna turn out really. Let's see now if I can see it changed my view. Swap shared screen with video. Show grid. Where's no? How do I see? Okay, here it is. How did yesterday go, Todd, with Ralph or Ed? I mean,
It was good. We made some, inroads with the secure risk. I got to meet Ray Williams, who's
you
the head.
did cool.
And we were talking to a new lady they have there that's hopefully going to provide us some lists of names from Milner. So
Oh, cool, sweet.
Hey, Todd, when you introduce me, part of that, say, hold your questions or put them in the chat box.
yeah. So we'll have a Q&A at the end. Yeah.
Yeah.
Hey, when you guys were waiting, was it just like a little video of yourself sitting there saying like the host will let you join soon, or was it, what did it look like?
I don't see anything like that. I
No,
just,
no, no, before I let you in, when you first logged in.
Oh,
It said the webinar will begin in a minute. Thank you.
Okay,
Our
that's-
logo was there. Thank you for joining us.
our logo was on there, it showed up.
Think so.
No,
It was
I
kind of
didn't see
blurry,
that.
though. It wasn't a very crisp picture. What I
But it was
saw.
like a little blue picture with thank you, it'll start soon, and our logo on the
Yeah.
right.
Upper left, wasn't it? I believe.
It worked. Well, David and I and Todd have gone for ground and ran. The problem is the picture that like the size is literally the same size 2x3 of a signature block size. So I used high res everything, but it shrinks it into that little teeny little box. So I'm looking at what I made on the other screen and it's clear, but okay, well, I guess it worked. David, you didn't see it when you logged in?
It was the same thing that I originally saw when you showed it to me. It was that first one. I don't remember. I just don't remember the logo being on there, but then I just don't
Huh.
remember.
Weird.
That may be just my visual memory, which is not the best in the world.
Oh yeah, no, you and me both. Oh, there's Kathy. I can let all them in at once, I guess.
Interesting.
And I guess my
I
question,
just present the confirmation again to everybody too.
Okay.
Oh,
that's my question is, how did we get to May the 4th already?
Oh,
Crazy, isn't it? I was thinking the same thing. It's nuts.
Yeah, the other things, take a couple of minutes, Todd, because I'm not sure that I've got 35 minutes worth of material. It's probably between 25 and 35.
All right, no worry. I don't think anybody is concerned about it, but I think it's just they want to get some good information. I think this is a good topic, so.
I think it is too. I was frankly kind of surprised at the quick response I got.
I'm surprised by the number that have signed up. I didn't think we'd have this many.
Yeah.
You ready to let them in, Christie?
yeah, we have, there's 10 of them waiting in the room right now. Can we just go ahead and start? What time are we at? Are we at 1 o'clock?
Wait,
Yes.
wait one more minute and then we'll get started.
Okay, I'm gonna admit them now. Here we go.
All set? Good afternoon, everybody, and thank you for joining us today. We have a great lineup for this afternoon. We're fortunate today to have Ralph Moore, the principal of Broker House, talk about some different business entities and different considerations that you need to keep in mind while working with these different entities. So please hold questions or put in the chat box. We're going to have a Q&A at the end of the session and talk about what topics and whatever you'd like to learn about. So without further ado, Ralph, tell us about S-Corps and LLCs.
All right. Well, thank you, Todd, and thanks everyone for joining us on today's session. I do want to say that, you're probably sitting there saying, okay, how is this going to help me sell life insurance, or what kind of sales am I going to get out of this? And if you're like me, we don't get paid until something's sold. But this one is not necessarily something that's going to generate an insurance sale immediately or directly. It's more a little bit of a learning, and also how you can help position yourself as the trusted advisor of your clients. I think that's part of our task as we do these lunch and learns, is to have an overarching effect of positioning yourself, you as the financial advisor, to be able to be the trusted advisor and bring solutions to the client that they may not have seen or heard. So with that in mind, we'll talk about the incorporation of these businesses and how it may affect their taxes. Because if you talk to most business owners, and ask them how they determined what entity they were going to be in, most of them just said, oh, I just formed an LLC because it was easy. That has kind of become the norm, that everybody forms an LLC these days, and they choose to have it taxed as an S corporation. So we'll get into that in a second, and what all that means. But when the IRS started in 1913 to start taxing, the first one they came up with was the individual. Everybody's familiar with the 1040, or I hope they're filing their 1040 each and every year to stay out of trouble. And this is where you report your income to the government. They take the lion's share and give you back what you might think you need. Then the next thing that came up is you started having sole proprietorships where you had people who were not employees, but there's been a boom of small businesses over the last century. And now many of these are sole proprietorships, are not incorporated. They just run a business and they don't have the liability protection that corporations offer. These are sole proprietorships, and the income for these is reported on the individual return under Schedule C. Okay, you may have seen a 1040 Schedule C in the past. Then also you have a partnership, and that would be a partnership, like if Todd and I were in a partnership, it doesn't have to be formally recognized. There's no paperwork. We're just gonna form a partnership. You probably need to have a written documentation outlining what's expected of each partner. That's an attorney question, but when the income comes about, let's say they make $100 of income, then the income is going to be split out depending on the ownership interest of the partnership. One may get 30% and the other is 70%. And again, that goes to the individual return of each of the partners. They actually file a return, it's called a 1065 return, and the income comes in a K1. We'll talk about K1s in a minute, but that's the next entity. Whoop. Sorry about that. And then the corporations came along. Corporations have been around for probably since the beginning of time, or at least since the tax code started in 1913. And back then, everything was a C corporation, meaning the corporation itself had to file a tax return. It was called a Form 1120. You may have seen some of these returns. It's like the individual 1040, but the corporation filed the return and paid its own taxes. Then in about 1958, the IRS recognized something called Subchapter S corporations. A Subchapter S, it has the liability protection of a corporation, requires all the filings of a corporation, but the income is distributed out to the individual via that K1, and the individual then records that on their individual 1040 tax returns. The Sub S corporation does not pay any taxes. The C corporation does pay its own taxes. And then about 1977, limited liability companies came along, or LLCs. LLCs have the option to be taxed either as a C or an S. 99% of them that we see have chosen the taxation of being an S-Corp. So it flows through to the owners of the LLC any income, and the LLC itself is not taxed. But you can have LLCs that are C Corps, and they do pay their own taxes, okay? An LLC has become the preferred entity, it seems, because it's very easy to file. I filed a number of them myself. I mean, an attorney would probably charge your client $1,500 to form an LLC, and really all it is, it's the same 2-page template, and you take that down to the probate judge and pay them $75 or whatever it is to register your LLC in the name, and you're done with an LLC. And you're not called shareholders, but rather members of an LLC, okay? But remember, it can be taxed as a C or an S. Then we have trusts and we have nonprofits. And we're not going to talk about trusts or nonprofits. That's kind of outside the scope of this conversation. Really what you need to know are either individuals, then corporations and LLCs, and whether the tax is a C or an S. The S is what is called a pass-through entity. Maybe you've heard that term, pass-through entity. And that means the IRS does not collect any tax from the entity itself, but income and deductions and everything are passed through to the owners of the entity, and then they report it on their personal 1040 tax returns. And this typically is K-1 income. Okay. Now, so really what you need to know, the only things that are taxed as an entity in corporations are C corporations or LLCs who have chosen to be taxed as a C corporation. Everything else that we talked about a minute ago are pass-through entities. Now, so what does that mean? Well, if it's a pass-through entity, it's taxed at the highest rate or taxed at the rates of your individual filer. And individual tax rates, if you look here, the highest tax brackets, these are from 1950 forward. It was 90% back in the 50s and 60s. So when you got to the top tax bracket, every dollar you made, 90 cents of it went to Uncle Sam. Only 10% of it stayed with you. Fortunately, if we look over since about the mid 80s, so the last 40 years, you can see the individual tax brackets have been around the 35 to 40% range, fairly consistent. Corporations, on the other hand, their highest tax bracket ever was in the 52% range, I think it was. And now it's been in the 35% range, but then recently under President Trump, they reduced those to 21%, okay? So you can see over time, the individual tax brackets have typically been higher than the corporate tax brackets. All right. Sorry about that, I don't know why I keep going backwards. Now, one of the big problems why people don't like C corporations is because if that entity is taxed, then there's another tax when you get it out to the shareholder via a dividend tax, okay, or capital gains. So we look at this chart and we start on the far left, and let's say you have an S corporation that makes $100. Well, the tax rate's 37%. And so after tax, that $100 becomes $63. Does everybody see that? Okay. Now, the partnership, again, that's another pass-through entity. Tax rate's 37%. That's the highest tax bracket today. And then that gets you $63 again. Today, if you have a C corporation, the tax bracket is 21%. So the corporation pays $21 of tax. They have $79 left after they pay the tax. And now if you want to get it out to the shareholder, they pay that out as a dividend. And the dividend rate to the shareholder is 20%. So 20% of that $79 is $15.80. So you're back to the $63 amount that you started with the shareholder, what they get after pocket, in their pocket after the corporation makes $1. So really in today's world, there's really not a double taxation. Okay, because the tax bracket for the corporation has become less. Now, so what does that mean to the owners of these corporations, and how does it affect them? So we're going to look at it if you have a pass-through entity or an S election on the left and the C election on the right, okay? So let's go through this, and this is if you owe the bank $1, if Todd owes the bank $1, how much money does Todd have to make in order to pay that bank $1? Well, if he's in a pass-through entity, he's got a 37% tax rate. And remember, this is not taking into account any state taxes. State taxes are over and above this. There's a 3.8% Obamacare tax on that. So he's really paying 40.8% on every dollar he's making. This is the marginal rate. So if he makes $100 of marginal income, pays $40 of taxes, he's got a net profit of only $59 after tax. So we go down to the next line. He's really got to make $169. He's going to pay taxes at 40.8%. Going to pay almost $69 in taxes. So to get back to his $100 that he can use to pay the bank loan, that company really has to make $169. Yeah, I see some heads nodding. Okay. Now, if you have the corporate bracket, and let's say that the corporation is the one that owes the money, the corporation pays a tax of 21%. So after they make $100, they've got $79 left. Not 59, they've got 79 left. If we want to transfer that and say, okay, we'd actually have to have $127 of profit to make $100. Because $127, if you multiply that by 0.21, that's $26 of tax, leaving you $100. So now that business, if it's a C corporation and it owes the bank money, it's only got to make $127 versus $169. There's no real reason if you owe the bank to have it in your personal name, so you pay personal income taxes and then pay the bank. Let's have it in the C corporation, have the C corporation pay the note. Now, so that's a savings of 42 cents per dollar if the corporation spends it versus the individual spending it. 33% savings to have the corporation pay for it rather than you be in the S corporation and pay for it after tax. Now, how does that translate? Let's look at an example. If we've got a business that owes $800,000 in a real estate loan and $400,000 in equipment. So it owes the bank $1.2 million. Either scenario, whether it's an S or C, doesn't make any difference. It's $1.2 million they owe the bank. Now, a minute ago, we looked and said, okay, with an S corporation, it costs them $1.69, right? To pay that dollar back. And a C Corp, it only costs them $1.27. Everybody following that so far?
Yep.
Now, so if you're going to pay the bank $1.2 million, and you got to make $1.69 to pay them $1, you've got to earn over $2 million of income to pay off that $1.2 million debt if you're in an S corporation. If you're in a C corporation, you only got to earn $1.27 times $1.2 million. So you only have to earn $1.5 million of income to pay off the same debt. The efficiency savings is $500,000 on that particular example. Pretty significant amount of money. Now, I would be willing to say that 90% of the business owners out there, as they have adopted whether they're going to be taxed as a C corporation or an S corporation, chose the S corporation because that's what everybody else has been doing. That has been the way over the last 20 to 30 years, it seems. Not necessarily true. There are lots of things that you can pay for in the C corporation basically on a before income tax that's going to save you 20 to 30 to 40%, depending on your tax bracket. Now, is every business owner a candidate? No, there's some that are, some that aren't. Let's go back to the LLC, and one of the reasons that people chose LLCs to start with and why they chose the S election. Because many of those were startup businesses, right? And startup businesses typically don't make much money, or they may lose money for a couple of years before they begin to make money. So if you have something that's an LLC and it's taxed as an S-Corp, you get that loss and you get to deduct it on your personal tax return. If you have a C corporation and have a loss, there's no pass-through loss to you as an individual. That loss just sits out there in the C corporation. And sometimes some companies fail because they never make any money. So that's a loss that goes to waste. Okay. So now, again, does everybody understand this example of how you save taxes in this particular situation? So now, again, we want to talk about, again, it doesn't fit everybody. So here's what we're looking for, or what you should be looking for as an ideal candidate. The larger incomes, taxable incomes over $400,000. Okay. And then their taxable income is more than they need to consume for personal living. Okay, because they have excess income, rather than take excess income in the pass through and then pay taxes on it, leave it in the C corporation and tax it when they need it. They may have annual life insurance premiums over $10,000, annual reimbursed medical expenses greater than $5,000, business-related debt, desire to retain key employees, and they may have multiple operating companies. And this is really a big one. This goes more back to not necessarily about a tax savings questions, but it becomes more of the liability and protection of the assets of companies, because many times if you have a company that has multiple companies, let's say you have one company that's an operating company, a company that owns real estate, and then another company that does something else. People set those different companies up trying to protect one company from the liabilities of another company if something happens. But typically, those companies all share employees. And if they're not properly allocating expenses between one company and another, and they get sued, there is the probability or possibility that the corporate veil could be pierced and all those be rolled into one. And now you've kind of lost your liability shield. So there's some things that you need to be talking about to your business owners about this, again, because they have spent, I would say, very little time in determining if they are structured properly and in the most tax efficient manner. And then secondly, are they doing something that might cause these companies to be commingled or the corporate shield to be pierced? These are all questions that they don't typically think about. Not the most pleasant things to talk about unless you're talking about tax savings. And I'll give you one example that you can think about. This has now become a very known topic. There's a lot of conversation about it. But how many of you are familiar with the SALT tax limitation? Okay, the SALT tax limitation, and you hear this mostly, you think it applies to New Jersey and California where they're paying large property taxes. But it also pays for those, it comes into play for those high incomes, because the SALT tax says it's a limitation on state and local taxes. How much can you deduct on your federal tax return. And that limits $10,000. Now, if you're in Georgia and you're in a 5% tax bracket and you make $500,000 a year, you're going to pay the state of Georgia $25,000 of taxes. But guess what? How much of that are you going to get to deduct on your tax return? You're going to be limited to $10,000. Now, if you're making $500,000, let's hope that you're not spending $500,000. You only need $300,000 to live. Okay, so now that stays in the corporation. There is no personal income tax for you to pay. And now you've just saved 5% on $200,000 of income. Okay. Now, so again, this really, there's nothing in this presentation that's going to help you sell an insurance policy tomorrow. Now, if you're like me, I don't know if I said this, I can't remember, but if you're like me, you don't get paid until something's sold. Okay. So, but what this does, it helps position you in the eyes of that client to be the advisor of choice. When they have financial questions, who are they going to ask? They're going to ask you. Now, you can go out and talk to them about this. We have a program. We actually have an enrolled agent on staff, and we'll analyze companies for you for $1,000 to tell them whether or not we think there's some tax savings by choosing a different entity type. Their accountant's not going to do it for them. Their attorney's probably not going to do it for them. And $1,000 is going to be real cheap to them if you show them how to save $30,000 of taxes. So that actually concludes my prepared remarks for today. If you have questions, please ask them. Either raise your hand and we'll call on you. Christy can call on you. Or if you're in the chat box, if we have any questions in the chat box, we can answer those. You have any questions, Christy?
Not yet. Let's see, I think we just got one. Oh, well, Randy, very good. Thank you, Randy. Let's see.
Okay, I either did a really good job of explaining everything or I did a really good job of confusing everybody.
Okay, do you see the one, Ralph, I don't know if you can see it from Randy. I assume K1 income is taxed as self-employment, is this question?
Yes, that would just go, they take it, it's either Schedule C if you're a sole proprietor or K1 if you're part of a member of an LLC. And then it goes into, I can't remember which line it is on your tax return, but you would wind up paying, you could pay Social Security and all kinds of your taxes on that.
Let's see, and then he says self-employment and Social Security tax. So Randy, are you good? Are you clear on that? You can unmute, or do I need to unmute you? Let's see.
Yeah, the Social Security, if you're making $400,000, as far as the Social Security, the old age portion, you've maxed out on that. It's that 3.8% you're going to continue paying taxes on.
Yeah, and that can be some of the advantage of a C corporation because they can avoid some self-employment tax. But anyway, thanks.
Yep.
And then we have a question from Chris Buckley. He said, doesn't LLCs have to have board members and such in order to keep their LLC protections, other requirements, ...
Now, not all states recognize single member LLCs. most do. I think Georgia does. I know Alabama does, but I believe Georgia does also. And you don't have to have a board of directors, but you actually are still supposed to have some notes of, for important business decisions. Like if you're borrowing money, I know is one that typically the bank asks you to get a resolution for a bank loan. But there's no board of directors for an LLC, and that's one of the good parts or the simplicity of an LLC versus an actual corporation.
Ralph, you mentioned that it's not that difficult or costly to set up an LLC, but if you came across an LLC and determined that it would be better for them to be a C-Corp, how difficult would that be to make that change, and how complicated, how costly would it be?
Okay, well, you can still be an LLC and have C-Corp, C taxation status.
Yeah.
You don't have to go from an LLC to a full-blown corporation. You
Okay,
just
so you
have
could
to
just change how you
change-
want to be taxed from a pass-through S-Corp to a
Yeah,
C.
you just void the S election, because
Okay.
actually all companies and LLCs are supposed to be taxed as C corporations, but there is something where you can do an S election, a subchapter S election, and you can renege on that and go back to the C corporation. You can't do it each and every tax year. I think it's a 5-year window once you do that, but that would be an accounting question once you go back to a C corp.
Okay.
But I think that what we'll say, and one thing that I did not mention when we were talking about tax rates, I don't want to get political, but all revenue bills start in the House of Representatives. So whoever controls the House of Representatives is going to control whether or not we see bills to increase taxes or not. Typically, the Republicans do not raise taxes, so they're now in control of the House of Representatives. Will be for this year and next year. Don't know what will happen in 2025. But the Democrats, on the other hand, are the ones that typically raise taxes. And if they were coming back into power in 2025, you'd probably see a revenue bill with increased taxes. Now, I think you see that playing out in Washington today with the debt limit. If it were you or me and we wanted to raise our credit card limit, we'd have to show proof of income that we could pay the higher credit limit. Whereas with the government, all they do is, say, oh, we're going to spend another $1 billion or $2 billion or whatever it is. And they'll just figure out how to pay for it somewhere down the road. They don't live on the same budget constraints that you and I do.
Ralph, yeah, it looks like Brantley had a question that was similar to mine, but then added, can you do a mid-year change of taxation, or do you have to wait till the beginning of the year, how you're taxed?
I'm not sure about that, Brent. I think you could do it mid-year, but I'm not 100% sure on that. You would have to be, you probably couldn't be a cash basis payer. You'd have to be on an accrual, but again, that's an accounting question, not for me. That's beyond me.
Ralph, if you would again explain the service that you said we could provide of provide the companies, if they have a company that needs a evaluation, what we can do for them?
Yeah, if you have a company out there that you think this would be a benefit to, or you talk to the owners and they say, yeah, we need to know if we're in the most tax efficient structure that we can be, we can get their returns. We'll put it into we have a enrolled agent on staff, which is actually Patrick. He can put it in a software and it'll come back and tell them what the tax savings may be if they stay with the S or switch to a C or vice versa. And we do that. And the cost to the company, we're doing that for $1,000 to provide that service for them. And I think that they would, now, we'll obviously be able to look at some and say, they're in the right structure, but there'll be some that we'll need to do a little more homework in, and that's where the $1,000 would come in. Because we would spend some time putting it in the software and then having an hour or two, probably follow up with the client to explain what our solutions are and what our results are. And that would be something you as the advisor would be a part of. Did that explain it, David?
I think that's all we have so far. If there's anyone else, otherwise we're good for now. I think we're good.
Well, I hope everybody found something of benefit there, but again, the biggest question is, if you have someone that meets, and it doesn't have to meet all these 6 or 8 topics on the ideal candidate, if they meet 3 or 4, especially with their larger income and the debt and having a spendable taxable income, those are the clients that would benefit from a review to see if they might be in the right tax structure.
Right. Well, thank you, Ralph. I think this was a good session, a lot of good information, and just let us know how we can help. We're here to help you, and we look forward to working with everyone. So have a great day, and thank you for joining us.
Right. And if you have anything in particular that you want to send in, you can email us to Todd or to me, and then we'll get an answer back to you. And on that one question, Brantley, I'll talk to a CPA and just ask if you can do a mid-year change. I don't know the answer to that one.
All right. Well, thank you, Ralph. Have a great day, everybody.
Thanks a lot.
Bye-bye.